So, what are the three most valuable types of businesses that you can add to your HoldCo? That's almost a guaranteed game changer. I've talked about two of them. It's been one that I haven't talked about nearly as much, but in today's economy, it's the most important. I think it is the most important. It is the most valuable. And as I looked at my portfolio, especially over this last week, this is a thing that like is winning above everything else. And so the first two are things that we've talked about. The first is like I realized this when I had a private equity fund that we bought a bookkeeper business, and this is probably a decade ago. So we had this bookkeeping business, and we bought it as a strategic acquisition. And as soon as we bought it, we doubled it because obviously we had a bunch of other businesses that were in the private equity fund that we immediately switched over. And that's been part of my strategy. Man, that's been probably 20 years ago. My very first holdco was in the real estate space, and I realized there were kind of two ways that I could grow that holding company. The first was to look at expenses that I had and go out and buy the businesses that I could then own and turn that expense literally into income, which is a beautiful strategy when you're buying businesses. It's like just number one. And then the other is buying demand. So you can kind of do it, the expense strategy. The other is buying demand. And this is one of the crucial things. We've been talking a lot about this in the Chairman's Club because, we have people that are doing two types of deals. There are people that are going out and they're doing supply deals, and there are people that are doing demand deals. And I tell people, like, the very first deal you want to try to do is the demand or the need. And, we've got Keon, who's just closed an amazing deal. And, we had our call last week, and like the plan for that is absolutely incredible. We're going to have him on one of the upcoming calls talking about that deal and some of our plans so that y'all can get some ideas there. But essentially what he bought basically is demand. And now we can go out and we have all these things that we can do to make money off of that demand, right? We have a man, Jay, who did this in the tax accounting space as we got ready for tax season, made a quick 5 figures from a deal that I think is, that's going to continue to make money for years to come. But with each of these deals, like they're doing deals on the demand side. But these are the kind of two perspectives that you can take. If you already have a business, then the first place to look is the expense side, right? Because you've got a bunch of expenses. So you can go and literally buy those companies and turn those expenses into income within your overall holding company structure. So that was the concept with the booking company. The second of the three is marketing businesses. And that's obvious, if you're in a business that has a bunch of marketing, to be able to go out and buy either marketing agencies or media. Those are amazing businesses to put into a holding company and to put into your chairman ecosystem. But the final one that I don't talk about as much because it is a little more complicated, but it's the most valuable. As with anything, it's usually the things that are the most complicated that and maybe the most difficult for the average person to get. I think those first two is like anybody just instantly gets. With this third one, it takes a little more thinking. It's a little more complicated. And I think for the average person, it's just out of the realm of what they think about, right? When you talk about the strategy. So it's like, no, like, well, how could I ever do that? And it's the financier strategy. It's basically kind of becoming the banker or having a banking SVP is what we call it, SVP, but it's having a banking entity or financier entity that does the financing and all that stuff of the other businesses in your holding company, as well as businesses obviously outside of it's still its own business, but you're adding this ability for you to make money off of accessing financing in your own holding company. And obviously, as you do each acquisition, this becomes a source of income, as opposed to financing being just an expense for you. So I want to talk a little bit more about this because number one, we're doing a deal in this space right now in Acquisition HoldCo program and in the Chairman Club. And like I said, one of the reasons that we started even a couple months ago, really putting a focus on this and starting to get this deal put together and offer it well before we saw the market crash, last week, is that this is a place that your other businesses can put money and then generate income and interest in a very, very cool way that I will explain. And it gets you out of being a victim of whatever new tactics any government, no matter where you are in the world, may have, or any business or whatever, that could impact your money. We don't want you to be a victim to all the change in the world. And so, as I look at my portfolio, I still love having different various investments. But as I look at all of my holdings, like the one that is still consistently doing just an amazing return is the money that's inside of my different financier entities in the different holding companies. And now we're doing a deal on one of those financier businesses within the couple programs. So here's the thing. Let's start from the beginning. When you're building a holding company, especially if you're actively acquiring businesses, there's just a few strategic pieces that can transform your business. And one of these is this concept of basically becoming the bank. So while most people are out trying to find the next great business to buy, what they're missing is all of the places that they can make money on the deals that they're acquiring. And one of those is the ability to fund those deals. Now, they're also missing the opportunity on all of the leads that they come across that may need access to financing. They're already talking to these people anyway, so they can fund those deals. So this is where the strategy comes into play. Now, what we've put together is basically, a chance to bring a financial business into your HoldCo with the deal that we're doing for all the folks that are in at HoldCo and Chairman. But if you're building this, then you want to build this from scratch because it not only complements your acquisition strategy, but it opens up a whole new revenue stream. And this happens to be the highest multiple revenue stream. People love SaaS and those kind of things, but the highest multiple, and I've been in these deals where we're trying to acquire, last year we were a partner in a registered investment advisor firm. They call it RIA. And, we were wanting to grow through acquisition, but it was so difficult to be like these things. I'm used to buying deals at 2 multiples. These things were easily getting 6, 7, 8 multiples. I'm just like, I can't bring myself to do it, but I still understood this is still a great deal at those high multiples. And so when you get into this financial arena, the multiples just skyrocket. So every dollar, we talk about the power of just all these strategies, whether it's expense strategy, demand strategy. With every dollar that you, bring into one of these deals, it's multiplied by 3. And so that's amazing that we can do that in the normal acquisition world. Once you get into the financial acquisition world, you're talking about every dollar that you bring. Now it's multiplied by 7, by 8. Like that changes the whole game and doesn't. And the really interesting thing with all of these is this isn't like a manufacturing business or a retail business or even like an online e-commerce business where every time you grow, it comes with a lot of headaches. They're like you can scale, but even with the e-commerce business, which is easier to scale than a lot of other businesses, when you're scaling that type of business, it's like you're just going to have more headaches. There's more supply chain. You just got more stuff coming through it. So there's more headaches there. You're dealing with your manufacturer. You're dealing with customers, and you've got a lot more customers. So with each, as you grow, you still are going to have those additional headaches. I love businesses that are scalable. And it's one of the reasons that SaaS has a high multiple, right? SaaS has a high multiple because you can scale and not have as many headaches as you continue to grow. But the cool thing is with financial businesses, it's in that same arena, but people like them even more because a lot of times there's a way for them to put their money to work. And that's what we're going to see in an environment that, we started to see it in January, even when things were going up and kind of down and up and down. And now they're just straight going down in the general markets. Guess what? People start looking for safer places to put their money. Now, the cool thing is there's still an arbitrage that you can take place. So the strategic advantage, if I were going out and doing these deals right now, is I want to get deals below a 3 multiple in this financial space. That was the reason that, we got priced out. We just got bid out of a lot of deals that we were trying to acquire. And so we started to acquire smaller deals. We did the deal in Phoenix with Lindio. and just buying these smaller things that we could get at a lawyer, and where there was a motivated seller, and I won't get into details, but like if you find a seller that has health issues and that kind of thing, we're like, hey, we're just going to make this thing easy for you. We're not going to tie you up in a whole bunch of due diligence. We're going to get everything put together. We're going to come in, and so there are situations where you can find these deals, and that's what we're doing. So the deal that we're doing right now, it's like a 2.5, maybe a 2.25 multiple. And so you want to find deals that you can get at that multiple, because then that becomes a arbitrage. Instantly, you're going to be able to have a valuation that's at 4 or 5, because a lot of these things end up going on the market at a 7 or 8 multiple. Now, the other thing that I love is that, when you get into these deals, when you go out and you buy one, they're typically cash flowing businesses, because the cost structure is very, very low. It doesn't take a bunch of money to make money on these things. And what's really cool in my each of my financier business, what we do is we make money in 2 ways. We're making money for with capital. So we have businesses. Those businesses will invest capital. And then as we come across deals where we want to do royalties, we want to do notes, we want to do all of these different financial strategies. We talk about that in the financier engineering strategy sessions in the Chairman Club. But with each one of those, we're putting money in it, and then we're generating money. And so instead of that cash just sitting in a bank account, we can put that there. Now, to tie this in to the other deal that we talked about recently, where one of my clients, who's doing a deal where he's basically buying $100,000 in cash. We did the hotel deal in Colombia within actually HoldCo, and that deal in Medellin came with like 200,000 in cash. So with each one of these, those deals are have money that you can literally just take and put into your financier business. Now, like I said, it's rare to find these deals because they can be kind of pricey. I get a ton of deal flow. One of my partners was just hitting me about a RIA deal, and he's like, "Man, this looks interesting." I'm like, "Yeah, I actually have spoken to that guy, and what he wants is crazy." Da da da. And so, it's a great space to play in, but you do have to work to get the deal flow. The next strategic advantage of doing these deals is typically there's just cash backed and there's low risk. And so, the deals that I love to do in this space is where they have a combination. There's a certain amount of the income that comes from capital that's been invested into those financial assets and instruments that are generating income. And then when it's outside of the realm of what we want to do, in an underwriting standpoint, then we can take that to someone else, right? So we can take that to another lender, an ABL lender, a factoring lender, Factoring I love. I used to own a factoring business. The commissions are absolutely amazing. And you can get commissions on those, right? But honestly, I'm trying to just put the money into factoring because the returns are really, really high. But if you don't have the capital or you don't want to do it, then that becomes another opportunity. But the cool thing is when you have both of those, you have just the straight income, then you have some asset-backed financial instruments. That is a cool place to play because it lowers your risk a lot. Now, the other thing that I love, and I mentioned this briefly, is when you're doing these deals, you can monetize the dead leads of the businesses that you don't buy. And so a certain number of those businesses, maybe they're on the market, maybe they have a issue, a sort of short-term cash flow issue or whatever. I have literally bought those deals, and they're just looking for an alternative. And that's why they're on the market. And sometimes you can make money off of just offering financing to those folks. And our goal is with every asset that we have access to, we want to maximize it. And so what you're looking at when we talk about going to the demand first, we want to, number one, find things that people have demand for, like financing. Like one of the easier things to sell is just money, right? People always are wanting money. So that becomes an easier thing to sell. But when we're looking at an asset, which is all of our leads, all of the people in our database of people, business owners that we've talked to, and the deal doesn't close, each one of those is an asset. And so they have things that they want, and this becomes an opportunity for you to be able to sell them something. I'm always trying to monetize unmonetized assets. Now, like I said, one of our goals is we want to do a lot more of these deals now that we're kind of doing this deal within the actual HoldCo program. We're looking to buy more of these. And so I would love for you to build one and then, we could buy it. So I definitely want more people to do that. So we are going to start doing some more financier training on just like how do you build these things strategically by doing joint ventures and finding these audiences to be able to just quickly grow these. And that's gonna be a part of Steph Wealth. It is already starting to be a part of the Chairman Strategy, our Chairman Club. And so this strategy is something I've got basically a 10 module training that we're going to add. So if you're in Steph Wealth, someone was asking, and I said in April, I've got something coming for the Steph Wealth folks. People are like, hey, I'm not in the Chairman. You've been talking a ton about this Chairman stuff, man. What about me? I'm in Steph Wealth. So this financier strategy is one of my favorite stealth wealth strategies. And we've got some bits in here training that's in the Patreon. But now we're going to have a kind of official step-by-step modules on just starting from scratch to building one of these. I want more of you to have these. If you want to kind of get an inside view and be a part of the deal that we're doing, then definitely join either Chairman or Acquisition Holdco, and we'd love to have you there. And then you can kind of see how it works and then go build your own. That's the best way to do anything. So you don't have to kind of learn from scratch. Most importantly, we're going to grow this thing pretty fast. And so you'll get some equity. And obviously, this is going to be a big part of what we're doing for that $100 million goal within the Chairman Club. So a great way to participate, even if you want to be passive and you want to participate passively and get a little piece of the action there. So check it out. Come hang out with us. Link below if you're interested in that. Let me know if you have questions on this strategy or if this makes sense to you. Hopefully we get more of you building these. I think no matter what, it's going to be really valuable for you to be able to build businesses like this that can put your money to work and do it in a way that is very low risk. That's perfect timing. Got delivery just showed up.